The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, here on TFNN.com, coming to you live inside Tiger TV, inside the Signal platform, and on your mobile phone at TFNN.mobi. Let's check out where the markets are at today right now. Let me go ahead and pull up our scanning watch list here that we got, and we'll check it out. So one second while I move that over onto the screen here. And trying to get the, well, we'll just do it this way. This will work. All right. So looking on over at the S&P, it is up $1.75. Russell is up just 90 cents. We got the Nasdaq is up 26.5 points. Dow's down 47. So Dow getting hit a little bit with earnings and all that stuff coming out. We're starting to get the mixed bags on the indices. Looking on over at copper. Copper is down over 1% on the day. Gold is up over 0.5%. Silver's up over 0.5% as well. We got natural gas up 1.3% and oil down 1.3%. So nice move down there on oil. Looking on over at our ag sector, we got the corn market right now. Corn is currently down 1.3% and soybeans is down just over 0.33%. Pound dollar up 51 pips. Euro dollar up 11. Dollar franc is up 45 pips. And we got the dollar yen's up 38 with the euro yen at 58. Euro pounds down 6. The Aussie yen's up 33. Aussie dollar's flat on the day. It's down a tick right now. Bonds have been pretty sweet as well as the dollar index, but right now they're pretty flat on the day, but they've had some fantastic moves. As well as those gold markets there. And that, let's see, we got pound yen up 115 ticks, 1.15. Going over the pound franc up 24. And the dollar CAD is up 62 pips. So some good FX moves on the day. Let's go ahead and look over at some of our top headlines real quick. Let's see, we got Wall Street mixed up as earnings and offsets and merger news and everything else is coming on out. And here's a report up on Reuters. Pull that one up right there. But lots of earnings, lots of just stuff coming out right now. This is a fun time. Usually get a little bit of flatness, and then things start coming out, and then we get the nice trends coming out of it. So just IBM, Travelers, DDN. So a lot of different reports coming out today. Canadian stocks, TSX sliding on down. Moving on down there, we got the euro dollar jumping above 1.0750. Wow. So, you couldn't even imagine a few years ago, right? Saying, I think the euro dollar will definitely be pushing above 1.0750. But, so it's like, that's a big deal today. Dollar CAD reaching a 5-day high. So moving up strong there, and let's see here. I said dollar CAD right there up 62 pips, up on a 5-day high there. Dollar yen hitting a fresh 1 week high. Early this morning, gold edges above $1,200, and we had a nice bump right above it, and went on up to 1204. And the gold market's right there, starting to pull back a little bit right now. And let me pull up a gold chart as well. We're talking about it. Let's see here. I know I have or had one. There we go. All right. So right there, bumping up on that, looking at that 1,200 number. Really, 1201 is actually one deviation. So we bumped right up against that. We came down. We bumped up against it again and popped a little bit higher and moved up. Didn't quite hit 1.5 deviations. Pulling on back now. Looking for potentially a reversal there. Expect a little bit of chop. Don't be too surprised right there at the 1 deviation going into the close on the day. So, again, not expecting a whole lot to come out of the close here. Only got, when I say the close on the day, gold pits closed there at 1:30 Eastern time, okay? That's why Nadex closes at 1:30 Eastern time. And the question may come up, what if I want to do a short on gold? Okay. And how can I do that? What if I want to do a long on gold? Depending upon, how you're trading it. And right now I'd be waiting for it to pull back a little bit right there. And I'd also update my volume. Let's see here. Let's hop in on volume real quick. And let's look at our 10-minute volume right there. And we'll go in. All right. All right, so give me 1 second. We'll load that up. We can see where our volume's at on the day with everything else. And okay. That's sort of helpful when you're seeing these moves. Like, okay, so yeah, we got a big peak volume right there, right at the top of the market. It's actually one of our highest volume points on the day based on price action volume, a little bit different than just regular volume. Looking at this normal 10-minute volume. Looks like we actually had a little bump right down here. 3,000 contracts there on gold, pretty much this morning at 9:30, and again right there at 12:50. So pretty much around the same area. The numbers going to look a little bit different, but notice it really got broken apart this morning. We didn't get it as strong as we do over here, but right here, really highlighting it for you. And so that's going to be sort of the magnet of the day. So we make sure to get a pull back just right to 1203.7. So, or it's going to break back down below probably. But anyways, range bound right here around the 1 deviation mark. Wouldn't expect a whole lot, like I said, to happen. We're going to look at spreads, talk about how to choose spreads here in a little bit. I think I'll come back to that. We only got like 30 minutes left on gold, so it's probably not going to be the best example because they're all going to look about the same right now. But let's see here. Maybe I can pull one up for you. Just do a quick example. All right, so if I'm inside the spread scanner here to make life easy, I'm going to pull up the market I want, gold. I'm going to put 0.7 for my minimum reward risk ratio. And I'm going to put -10, +10. Really, I want closer to 5, but you could put 10 on there. If you want to make it tighter, just put 5. Right now, I mean, we got 15 minutes left on everything. Proximity is really tight on everything. So it's not really going to matter as much what you choose, but I guarantee you still will get a little faster move on ones that actually have some value left in them. Okay? So like the ones that like right here that can move like $226, $476, you'll get some nice movement. Now, all of them have a lot of profit, but the closer they are to the center, the faster they move. So it's a delta. So that proximity, you want that number low, but again, the closer you are to the center, the closer you are going to be to a delta of 1 on the trade. So this contract and this contract right there, they would presumably move a little bit faster the further you are away from expiration. Okay? So like right now, we're seeing the profit pretty much stay the same, and we're seeing the risk probably stay about the same because we only have like 14 minutes left. So with only 14 minutes left, I mean, you're going to be at a solid delta, but the further you get away from it, then you'll actually see that the price will change a little bit more. I want the market to move a little bit so you can see the price change, but it ought to be pretty on par because we're so close to expiration. The big thing is, if you have like an hour, 2 hours, 3 hours left till expiration, that's going to make like your delta is going to be 90 or 80 or set. Like it's going to be lower. Okay. Actually, as low as 70. So right now it's going to stay right on par with it because we don't have any theta really left to burn at this point in the game. So let me see if I can grab a screenshot of that one just for lesson purposes. But also if I'm looking to buy, so I can click the buy on there. Okay, it's pretty obvious. But and I'm not saying to buy right now. I don't think there's enough worth even getting in the trade to pay for fees and everything else at this moment. A few things to look at on this chart we have more profit and the same risk on these two trades. exact same expiration, exact same proximity. Okay. And so one thing I'll do is I'll select all of them like that meet my qualifications. Okay. I'll go in there and I'm like, same risk, more profit, same proximity, same time to expiration, get rid of it. Okay. This one can make more money, same proximity, same time. If I'm going to use, say, a 40 tick stop or whatever, I can get rid of that. Now I got these left. Now I got to choose, do I want the faster contract? Okay, that's going to be one of these two. If I want the faster contract, then I'll choose that one. Unselect that one. And now if I want the fastest contract, I can just trade the master spread. Notice how it's 1,000 ticks wide? Okay? I can just pretty much buy and sell that almost all day long. So if I just want to have one contract, I literally can have that contract, and that's the contract I'm trading all day. And it's one of the easiest ways to, go in there and do the trade just by requiring going in and choosing that wider spread. Okay? Because you can buy this as it goes up, buy it as it goes down. I mean, literally, same contract you can be buying and selling all day, just like if you were trading gold futures. Same contract as you're buying and selling up and down as the market oscillates throughout the day. Okay? Now, people get that risk, and they're like, oh my gosh, look at the risk. I'm not going to stay in the thing for, massive move there. I mean, $10. I mean, what is that? That'd be 516 ticks. Okay? It ticks in dimes, right? So 10 ticks, $1. All right? So let's do some, simple math for you here. Just from the unrealistic fears that we often have when we don't understand the product sometimes, which is good. I mean, it's good to have that fear if you don't understand it. But if I have basically, let's see, if I bought it, let's just make it easy. If I have $516 in risk and every tick is worth, is that 0.1, or I guess that'd be times 0.1. So times 0.1. That'd basically be a 51-point move in gold. Can that happen? Yes. I've seen 100-point moves in gold in a single day. Is it often? No. Should you stay in to allow it to move that far? Definitely not, unless you're on the other side, right? So, limit your risk. The max risk is just a max risk. It's your margin that you put up when you place the trade. And unlike a future where you put up your margin plus you have drawdown, you don't have any additional, there's no additional money coming out. That's it. It doesn't get worse. No additional money comes out. That's the cap. Okay? It can't get worse than that. It can be better than that, meaning it could move 30 or 40 ticks against you and you could bail on the trade. So keep it simple. I'm looking at one of these two spreads if I'm going to place a trade. No reason for the other ones unless you just want no stop loss and a slow moving spread. All right, stay right there. We'll be back right after this break.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Darrell Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so looking over at Newswire, Market Pulse here, and trader was arrested in Britain over the alleged flash crash roll. And I think this is probably complete BS. But anyways, a futures trader was arrested in Britain on Tuesday over allegations of manipulating the stock market in connection with May 2010 flash crash, the Justice Department said. The U.S. says Navinder Singh Sarah, I don't know if I butchered that name or not, used an automated trading program to manipulate the market for E-mini S&P 500 futures by allegedly placing multiple simultaneous large volume sell orders at different price points using a technique known as layering. Oh no, he did not layer his orders in the market. Surreal created the appearance of a substantial supply in the market by selling. Okay, let's go back and read this. Used an automated program to place multiple large volume sell orders. Well, the market went down. He was right. Okay, created the appearance of substantial supply. Yeah, supply to sell it. Okay, during the flash crash, the Dow Jones fell by 600 points in a 5-minute span. I love how they want to quote everything else when they say he did this just on the S&P. Okay, let's see here. And let's see, we got Bloomberg reporting on it. Let's see what they have to say. Futures trader was arrested. U.S. seeking extradition from him from the U.K. I mean, if the market went up by 1,000 points, nobody'd be complaining. You know, come on, learn to go short, people. Anyways, let's see here. And I mean, it recovered like the same day. So I remember that day because I was short and then I couldn't believe I made money and I walked away and I did not look back at the day. But the day left rigorous investors searching for answers. Let's see. The CFTC, Security Exchange Commission, SEC, had a report 5 months later, just pointing at jittery markets during the European debt crisis, one mutual funds large trade, and automated traders accelerating their buying and selling and then withdrawing from the market. I mean, this is just amazing. Let's see here. What else do we got? Let's see over here on Forex Live. So right here, okay, this is the day. So here, blew down, popped back, okay, and then recovered. I mean, it was like, come on. And then the market went on down that far anyway. Like this is the amazing part. It flew down. It recovered over 50% before the close. Within a couple days, it was back to where it was. And then give it a couple weeks, and it was back all the way down there anyway. It's not like, I mean, it was there anyway. It already went down. It went down afterwards. It went back up. It went back down to the exact same point. Flash crash or no flash crash, it still went down to that price. The market was dropping. All right? Yeah, I love this guy right here. He's like, there's no way you're going to convince me that one person in one algo does that kind of damage. And if it is, that's even scarier. If one dude with one algo on their computer can crash the entire market 1,000 points, then just follow the charts. That's the simplest answer. And try to learn how to be that guy, I guess. Because that makes absolutely no sense that one person with one algo is going to take it all down. The same year of the crash, the CFT releases a report. For more than 5 minutes, starting at 2:44 p.m. in New York, it's quoted at 1665 securities were delayed 5 to 20 seconds or more. Quotations in the same securities disseminated through its private feeds had an average delay of 0.008 seconds. As the result, 20-minute route erased $862 billion from the value of U.S. shares, according to data compiling by Bloomberg. And it got it back. And then it went away 2 weeks later. That's left out. The report stated that deliberate attempts by traders to overwhelm exchanges with orders played no... Oh, wait a minute. The report... By who? By who was that? Oh, the CFTC. The report stated that the deliberate attempts by traders to overwhelm exchanges with orders played no role in the May 6th crash. What's it say here? He allegedly placed multiple large volume orders. Wait a minute. The report stated that a deliberate attempts by traders to overwhelm exchanges with orders played no role. Pick one. I think he has some reports to help in his defense. The majority of activity that occurred on May 6th wasn't, quote, stuffing. It was, quote, withdrawals. Exactly. All right, we'll be right back right after this. Stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And again, this story is just amazing. They're saying they're going to arrest this trader. And I mean, you got to check out this quote here. All right. So Navender was a futures trader who operated from his residence, his home in the UK. So a trader operating out of his house. He traded through his company, meaning he had a personal, company, corporate account for obviously tax benefits. So one trader trading from home in his little personal corporate account using commercially, meaning, things you can buy, like NinjaTrader, CQG, stuff like that, using publicly available trading software that includes automated trading. Well, that's pretty much every software out there. And it allowed traders to communicate with the markets. Well, that's why it's called a market, because you go to the exchange and you communicate with the market. They send you data. You send them orders. They confirm the orders. That's the point of communication. Okay? That's how else does it work if you don't know the price and you can't send the order? So software allowed the trader to communicate with the markets. Not only communicate with the markets, but as quickly as possible. Oh my goodness. Not only is he talking to the markets, not only is he looking at the price, but he's doing it really, really fast. It's called co-location. Get servers in Chicago, get servers in New York, Jersey, get servers in London. Everybody does it. Only cost a couple $100. Okay? So, yeah, as quickly as possible. Of course, because here's the rule on futures. First in, first fill. So if me and 30 other traders place an order, let's just say for one contract, and there's only 20 orders sitting there, the first 20 of us are going to get filled. First in, first fill. Okay? So yes, speed does matter if you're going in for those ticks. But not only did it allow it to communicate quickly, but it allowed it to place orders quickly, modify them quickly, and by all means, cancel those orders almost simultaneously. Well, you can't place and cancel simultaneously, but you can do it within milliseconds, which I'm sure is what they mean by simultaneously. So what? Somebody puts in an order, it gets filled, or it doesn't. It's called fill or cancel. I mean, Nadex is actually releasing this very feature. Check this out. Let's see here. Look at this. Nadex will be releasing on the Nadex Pro platform fill or kill or instant or cancel. Okay? Let's look at what that means. What does it really mean? If this is so bad. A fill or kill is a limit order that will be canceled if the order cannot be immediately be filled in its entirety. So I place 1,000 contracts at a price. Either you fill me instantly or you cancel my order on all 1,000. Either I want all 1,000 at that price or I don't want to be filled. Talk about instant. It's like either fill me or don't. Now. Instant or cancel. Immediate or cancel. Is a limit order that can be filled in whole or in part with the remaining account canceled. I put in 1,000 contracts, 100 get filled, cancel the other 900 instantly. Oh my goodness. Wow. So this guy's getting charged for using publicly available trading software out of his home, on his computer, that allows him to automate trades, that allow him to submit orders quickly and modify or even cancel them instantly. That's normal orders. That's a fill or kill, an immediate or cancel order. It's not abnormal. It's not illegal. It is normal. Okay? So, yeah, I don't know where they're going on this or what else they think they're going to get. They were pointing at another firm before. They sold 75,000 E-mini contracts. Well, if they would have bought 75,000, made the thing up, run 1,000 points, I bet nobody was pointing any fingers at anybody at that point. So here's actually the report. Here, and then, I mean, this just blows me away. That, I mean, these things that they're doing, like, I mean, Nadex is actually adding this feature to their platform. So to submit and modify and cancel near instantly. So Nadex is adding this. It's not a bad thing. If you don't get your price filled, then don't fill me. Like, I don't see where we're going there. But yeah, I mean, just looking at the SEC panel, this is a report from 2010. So check this out. We're taking a step back 5 years. Okay. The extreme price fluctuation on the May 6th flash crash, trading chaos, greatly affected everyone from individual investors to corporations that needed to raise capital. In response, the CFTC and SEC Joint Advisory Committee formed an emerging regulatory issue by a detailed report to the SEC and the CFTC describing what happened on May 6th and making recommendations on reforms preventing flash crash like market disruptions. By the way, what's really interesting about the flash crash, if you want to do an investigation, okay, I don't know if any of y'all listened to good old Ben Lichtenstein down there on the CME floor, and he basically does the audio for the CME S&P pits, and he's calling out who's doing what and everything else. I'm listening to this. I have a recording because I recorded it that day when I was trading it, and it was really weird. He's like, guys, I don't know what's going on. I'm sorry, but they just lowered the circuit breakers. They just lowered the limits. He's like, I have no idea, but they're lowering them right now. So I'm in. The market's going short. Okay, and I mean, it's not even bad yet. It's just, it's a normal little down day. And then he just comes out with this announcement before it even fully goes into full effect. And he says the CME is lowering the circuit breaker, meaning intraday live, they said, we need to move it down or the market's gonna trigger the circuit and it's gonna close all the orders down. So right before the flash crash happened, they saw it and they lowered it below to where they saw the orders at. That's really odd. They saw it first, lowered it so the market wouldn't close. Flies down, everybody knows. I mean, they made it very aware where that circuit breaker was. Everybody, nobody else was filling any orders on the way down there. Like when it got down, that just stopped because nobody wanted the market to close. Boom, pops back up, and flies up like 50% from that massive drawdown. They saw it coming. Literally. I've never heard them low. I mean, I'm not saying it's never happened before, but in all the years I've traded, I've never seen them lower the circuit breaker live intraday minutes before the market's going to crash. They had a heads up. Okay? They knew something was flying over and about to bomb the market. And they called it out. Okay? All right, so the report states that the deliberate attempt by traders to overwhelm the exchanges with orders played no role. Yet, he's being arrested for allegedly placing multiple orders. This is their report. The majority of activity that occurred on May 6th wasn't, quote, stuffing. It was, quote, withdrawals. Placing orders is stuffing them. Okay? Like putting orders. All right? Quote, withdrawals is they're nobody's buying. So it's just going down trying to find a price that somebody will finally buy at. Okay? That's what happened. People just stopped buying. And they came to that conclusion. A report further stated the plunge was triggered by the sell of futures contracts on the CME that set off a chain of selling that bled into stocks and ETFs, even though they oddly had some that just didn't quote for 20 seconds randomly. While the study said selling was worsened by automatic firms trading with one another, firms, not a dude out of his home, the report placed no emphasis on the practice that has come to be known as, quote, stuffing, in which investigators usually seek an advantage by delaying data feeds. Well, he wasn't using delayed data feeds. There was anybody else. And they said it was not stuffing, but yet they're trying to charge him with stuffing, which, again, just placing an order and canceling it. Okay? According to the report, no evidence was found that delays led to price declines, since most high-frequency firms, the providers of the bulk of the liquidity of the market, use private data feeds from the exchanges instead of publicly available information. Rigorous said the delays may have exacerbated the concern about the accuracy of prices, encouraging providers to reduce their trading, which is very true. If they see something that's off, they're going to pull their quotes. Nobody's putting up an order to offer, to buy. Drop. Okay? However, the evidence doesn't support claims that delays, triggered or otherwise, caused the extreme volatility in security prices observed that way. So, delays weren't causing it, but there may have been pulling of quotes, which is, again, not the stuffing, but going in and actually withdrawing your quotes. Okay? The report further stated that the New York Stock Exchange was in the process of upgrading data systems on May 6th. An interesting tidbit that most people leave out. They were doing a little upgrade. Who knows what the upgrade could have caused? Okay. Less convincing are allegations about people intentionally trying to gum up the works without any evidence. Okay. Some of the recommendations made in the report include the possibility of imposing price and volume limits for brokered traders, requiring executing brokers to adopt certain trading practices when executing a large order by using an algorithm such as price or volume limits, requiring executing brokers to have an obligation to monitor and make non-disruptive trading judgments. Also requiring executing brokers have similar limitations as exchanges, which just have the maximum order size limitation price handling that prevent entry into the trading engine of an order that exceeds a predefined maximum quantity of a price difference from the current market. Other options that the panel considered increasing visibility into the full order book and potential revisions to market pauses, either for single exchanges such as stop-loss functionality logic or the cross-market circuit breakers. They had the circuit breakers. They lowered them. Some experts say that although it is not intentional, it is a big accidental problem that no one seems to be learning from or doing anything about. The quote behavior has stopped and started again on different exchanges since March 6 and has also occurred before then. Some critics of the U.S. market structure have urged exchanges to adopt a fee for quote cancellations that exceed a certain rate and said bids and offers should remain available to investors for a minimum amount of time, such as incentives may curtail the ability of firms to submit and cancel orders rapidly. Here's what's really funny. All this is about looking at the S&P. On the CME, there already is a submit and order cancel ratio. Do you know that? There already is one. Now, not on stocks, but on futures, there actually is a limit on that ratio. I found out sort of the hard way because I got a nasty little notice saying that you better stop. Let's see if I can find it. Because what I was doing was I was trying to cross ARB, oil and mini oil, because they tick differently. Oil ticks in 0.01, and mini oil QM ticks in 0.025. So by that mere fact, if it moves like 4 ticks, well, the other one can only move in, 5. So either it has to be behind or ahead. And when that happens, it's off. So I used CQG auto spreader, which allowed me to go in and basically say, sell 2 mini oils, limit, and buy an oil on market, and constantly adjust to try to get a quote that is, basically I said I wanted, a few ticks off. So if it got to +3 or -3 difference, enough to cover my bid offers, enough to cover my commissions, then, I actually think I had it at 5, but put it at 5 +5 -5. So it's constantly just there and submitting all day long. And it made some money, it wasn't massive, but it worked. And anyways, a substantial amount of orders. I'll find that and I'll bring that up when we get back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so CME knew in advance that they were going to, the market was going to crash. They actually lowered the circuit breaker live. All these things are like, hey, maybe they need to have messaging rules and how many orders and cancellations and fees, and they already have that, okay? This is from 2009, by the way. This is email I got 2009, before the flash crash, which happened in May 2010. Got a notification from the CME regarding a message violation on mini crude. On contract trade date, April 24th. Your account, which I probably should, get that out of there, generated 92,167 messages, meaning submitted 92,167 orders, with 88 fills in that process. Okay, so 88 fills. 92,000 orders with a ratio of submitting 1,047 orders to 1. Okay, that's pretty massive. The allowable ratio, notice this, the allowable ratio for the product is 45 to 1. So I was a bit above that. Okay. And I had no idea there were ratios. I didn't know there were limits. As a brief summary of the CME's messaging policy, more details available on the CME website. Each product is assigned an allowable volume ratio that is calculated at the firm level. Each firm is allowed 2 violations across products in a 30 business day period, after which time each subsequent violation, there is a $2,000 charge. The 2-waiver clock does not restart until such time as the firm goes 30 business days without a violation. Given the number of products cleared at the CME, there's virtually no opportunity to get out of the surcharge mode once you get in it. Any surcharges that are past the advantage will be passed to the client, which would be directly to the trader that, did 1,000 orders. Responsible for every messaging violation. The surcharge are appealable, giving extenuating circumstances, meaning if you didn't know and you stopped as soon as you were notified versus you just kept doing it. If such circumstances exist in this case, please provide the details to me. I will attempt to have the surcharges waived. All right. So every single surcharge would be the sole responsibility. So that already existed. Okay. What was already there before the flash crash ever happened. Okay. You can go over, there's a messaging efficiency policy that's already in place. Boom, done there. Okay. For the ratios, those benchmark ratios are defined. So right here, Globex benchmark ratios. S&P E-minis, 30-1. Now, do they really worry about it? No, they look at the overall brokerage before they even concerned about it. They look at the firm. Okay. So they don't focus on one individual trader. I mean, firms have, volume, et cetera, and they move on. Okay. So, what I want you to see here is the fact that there were already ratio rules in place. This isn't new. It's normal for traders to place and cancel orders quickly, especially on futures. There's even orders types built for that on normal trading software. So I don't know why they're doing a witch hunt after all this time, but so far everything I've seen has been complete bull crap. All right, y'all have a great day, and I will see you Thursday right here.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.